This is the difference. These are the little things. And I think it permeates throughout the firm. We're not a perfect firm, of course not. But for an advisor out there who's looking for a team atmosphere that they can work with their clients, they can build their business as they want to build, they can work with the vendors that they want to work with, not, oh, well, we're not going to allow you on the platform because you don't give us a piece of the action or anything like that. There's nothing wrong with that. There's nothing illegal. We've decided not to do that. We want people to be able to work with the vendors they want to work with. We have to do it all based on compliance, and it has to all be done correctly from a regulatory standpoint, but we'll figure out how to do that in the right way. And I think those little things permeate throughout the business. And I think that'll make us stronger and allow us to grow in the right way.
Welcome to the Active Advisor Podcast, brought to you by Harbor Capital. Join us as we learn from pros who have helped thousands of investors live better lives. I'm Bryan Moore, and I'll be chatting with some of the brightest minds in the financial advisory business, bringing you insights on practice management and investment research that works for advisors and their clients. Joining me today on this episode of the Active Advisor Podcast are Brett Danko and Ted Durkin. Together, they're managing partners, but respectively, Brett is the CEO and Ted is the president of Main Street Financial Solutions. As the founder of Main Street, Brett has worked in the financial services industry for many years and is a featured nationwide lecturer on matters of personal finance. He's a dynamic speaker who frequently provides training to top-tier advisors and to consult on complex planning issues. And if that's not enough, you might also recognize Brett for teaching the many required CFP education and prep courses throughout the United States. Ted, with nearly 30 years of industry experience, 20 of those holding high-level positions within Merrill Lynch, is responsible for overseeing all the financial advisors at Main Street, while also driving firm initiatives and goals, as well as collaborating, coaching, and recruiting top-tier talent. Main Street is a fee-only firm that provides customized financial planning and investment advisory services guided by integrity, trust, and CFP expertise. The firm makes it a point to prioritize their clients' best interests through continuous education and by fostering long-term relationships that help them achieve both financial and personal goals. Without further ado, welcome, gentlemen, and thank you so much for joining us.
Thank you, Bryan. It's a privilege to be with you.
Yes, this is going to be wonderful. Thank you.
Now, typically here on The Active Advisor, we like to get the conversation started by asking each of our guests, what is the first memory you have related to money or investing? Let's start with you, Ted.
Oh, thanks, Bryan. Mine's a recurring memory. And for the first 18 years of my life and our family, we moved between Scranton, Pennsylvania and Philadelphia, outside of Philadelphia. And I'll never forget, my mom's philosophy was, she's my hero, she was raising the five of us, and it was to live in the nicest neighborhood in the cheapest apartment that we could find. And I remember the look. She'd walk in and I knew we were going to move because the eyes said it all. And she'd call a family meeting. And as she called the family meeting, I now, as I'm older, recognize the courage that it took for her to be able to, number one, have that grit and determination. And it was always an adventure. She never had defeat. And it was always met with the next place will be better and it'll be optimistic. So that was my first true relationship to money, to understand that neighborhoods matter, access to the right resources matter. And my mom made a nickel go as far as she possibly could.
Excellent. Brett, how about you?
I was playing Monopoly. I was thinking about it. That's a great question. Playing Monopoly with older kids, and they were relatives of cousins. And I'm 6, 7 years old, and I think I'm winning. And then at the end, basically, they all had $500 bills. I don't even know if they still have that anymore in Monopoly, stashed underneath. So here I am, think I'm winning as a 6 or 7 year old. They're not much older, but they're older than I am. And I realized I lost terribly. I realized that when they pulled their stash out. So I learned I should probably have a stash someplace always. I should probably do that. And I also learned that just because you think you're winning, you may not be winning at all. And that you really have to be cognizant of everything going on and think about it. Now, that was for a 6, 7 year old, but I still sort of remember that money thing was like, I'm rich. I got all this stuff. I'm winning. I have all this Monopoly money. In the end, I didn't have what I thought compared to other people. I didn't have that. And so I think that was one thing that always affected me as a 6, 7 year old. I still think back on that.
Well, hopefully you got a rematch at some point in time, Brett, and we're able to kind of, win.
Yes, although I don't know that I won. There you go.
But you got to hate it when older cousins play games with you like that.
Yep. Yep.
Going to switch gears here a little bit. We're going to kind of bring it more closer to current day, but would love to hear the story about the origin of the firm. And if you could share a bit more about how you chose to start your own practice and some of the driving factors behind that decision.
Yeah, I was working for a small investment fund and then for another startup. And I realized, it wasn't exactly what I wanted. And that sort of came to its conclusion. And I realized I needed to either get a job or I needed to go ahead and start my own thing. And at that point, I didn't really want to work for anybody. And I said, let me just try this on my own. And I was so fortunate. Had an incredibly supportive a wife who basically said, you have 2 years because I want to start a family. So you have 2 years, not to be making tons of money, but in 2 years, if you are feeling fulfilled and you actually have some money coming in, doesn't need to be a lot. You can go ahead and do this and I will support you 100%. So we refinanced the house. We took out, I think, $42,000 or something, which was all the money. I was like, okay, I have this little nest egg that we can live on. She was working and we went ahead and that's when I started Main Street Financial Solutions and then also Brett Danko Education. And I was doing lectures for college kids. I was doing lectures in schools. I was doing financial planning, not managing assets, but just doing financial planning for an hourly fee. I believe it was $75 an hour. So this was 24 years ago or so. Got my certified financial planning designation. And then I started teaching the CFP curriculum. And that's what I really love to do. So I sort of went 150 miles an hour in many different directions. But the one that really came together for me was the education side. And then 5, 6, 7 years later, in 2007 and 8, we started Main Street Financial Solutions, which is actually managing assets, working with advisors, being full fiduciaries, certified financial planning, sort of curriculum, thought process behind it. And that's really where it all came together for me. And then I never had to go work for anyone else, so to speak. Well, now I work for Ted. So let's just be honest here.
Well, Ted, you joined the firm a little over a year ago, and obviously you run things now. So you've got a great background, a super extensive experience with a lot of the big bulge bracket firms. What drew you to Main Street and what ultimately led? Obviously, there's probably some part of you that looked coming from that wealth of experience. I kind of like a couple aspects there of what Brett's doing or kind of what their goal is and kind of what they're looking to achieve. What was the kind of linchpin that ultimately led you to join the practice?
And that, Brett, it's, Brett and I tease. And one of the many things we agree upon is it's not I, it's we. And what drew me the most was that we. And quite frankly, Brett and the team. So I was looking to make a change. I'd been at Merrill Lynch and that for 20 plus years. I was at UBS for 9 years, give or take. And they're wonderful firms. But I had this itch. And there were really neat opportunities that were out there that, quite frankly, I didn't lift my head up for. They just all of a sudden things start to happen. And I received a phone call from Brett and I had a loose friendship for a while. And we got together over dinner with our wives. And Brett had said, hey, would you consider working together? And I didn't even really understand what the opportunity would be and that kind of stuff. And I was starting to focus on some other things. And I thought, no, not really, doesn't make sense. And then all of a sudden we started to talk. And we started to explore. And through that exploration, going back to what I'd mentioned about my mom and stuff, it was like an adventure. And I started to realize I really enjoy and feel that the large firms are wonderful. But at least for me at this stage of my career, it was a lot about reduction in force, getting smaller in real estate, trying to find more scalable things, making sure that everything was right down to the highest level profit, putting as much into call centers as possible. And my conversations with Brett and the team were about what can we do and how can we grow? What's the next best thing? How can we expand? How can we, most importantly, and what all the conversation centered around was, what is right for the client? The client, the client, the client. So ultimately what drew me there was that opportunity. And then the final thing I'll say on it would be this. The people that know you best are the ones that know you best and are around you all the time. And I would come back from recruiting meetings from different places, and they were wonderful. They're normally not telling you how their firm stinks, right? They're normally telling you nice things. And there was a lot of enthusiasm. But I would come back after meetings with Brett, and some of them were long. And Meg, we were having our pillow talk or whatever you want to talk it. And she'd say, finally just turned to me, she said, do you know how much more pumped up you are after the meetings you have with Brett and the team for Main Street Financial Solutions than you are with this other stuff? And I said, really? And she said, it's night and day. That was the leading indicator. And that hasn't changed. I use an expression with Brett and the team a lot, which is, why does the honeymoon phase have to change? And I don't believe that has. So a credit to them and where we're looking to be able to go. But thanks, Bryan, for asking the question. And thank you, Brett.
It's a great answer. Brett, I want to bring it back to you because really would love to kind of hear. So you start out on your own. You've obviously got a lot of irons in the fire. I mean, between the teaching and you mentioned at universities and stuff like that. What, if you wouldn't mind sharing some of the ways that the firm has grown or transformed for those early days? And obviously it's kind of gotten bigger and you've added personnel, but has that kind of core goal or core idea that you started out with, has that evolved over time, or is it really just kind of you've been able to bolt onto that?
That's a great question because the core has always stayed the same. It's what's best for the client, or on the education side, what's best for the student. And I think a lot of people say that. I don't think they actually mean it. I think when push comes to shove, if there's a profit margin or this or that, they're just going to make the decision. It's not going to be illegal. It's not going to be anything illegal, but they're going to make the decision for, all right, well, this is what's best, say, in the short term for us right now. And that I don't think has ever wavered. That's never changed. Now, the business has transformed in that starting off, I had there's this education business, which was me at the time. And then involving other people with Main Street, that's evolved over time. And I think Ted likes to have a little fun that it was like a side hustle for me, this RIA, this registered investment advisor. And one of the things I realized 3 years ago is that I'm not capable of actually spending the amount of time or even have the experience to actually take this to the next level and keep it what's best for the clients and what's best for the employees, et cetera. And that's why Ted and I truly are partners. Like, we have titles and stuff, but I actually mean that. Like, we are truly, truly partners. And all of our discussions was about us and the team. And it was separating all those I's and my's and me out of it. And all of our discussions, we would just talk and talk and talk. Ted's expertise on practice management, on understanding business organizations. We've had challenges, technology, upgrading our technology, making sure that our security is the best that it can be. And we've made changes over the past couple of years. Hey, we need to upgrade this, make it even better. It was already good, but let's make it better. And Ted's sort of practice management, not only with advisors, helping them to grow, but also dealing with different personalities, understanding, taking on new tasks and say, okay, we need to upgrade here, but Brett, we need to think of these 3 things before we even go to there, because I've had this situation 5 times before in my career. That's one of the things that was so helpful. So it's transformed, because you asked me, the core has stayed the same, but it's transforming now over the past year and a half. So let's grow up. Let's actually really spend the amount of time and resources, et cetera, to take this to the next level, because that's what will be best for the clients. And then that filters up, it's best for our advisors and our employees. And then that filters up to what's best for the firm. We don't have if we don't bring over 3 people or we don't have profit margins of this, well, then we've failed. It's okay. It's great. We do want to have profit margins and we do want to grow, but it's growing in the right way. I don't have to worry about 5 years from now that I have to return capital to investors. We don't have to worry about that. We're actually looking at it as, well, 5 years from now, okay, or 7 years from now, it may take 10. It might only take 3. That's the way we want to build this. That's the way we want to grow. That's the way that we can continue to do what's right for our clients and our advisors, our employees. Ted has been the game changer for the firm. He's been a game changer for me personally. And I'm not just saying this to make him feel good. He knows this. And the respect I have for him is immense. So that's what's been fun. I'm actually learning from him different ways. But then he actually said to me once, and maybe you can comment on it, was, I need you to teach me a little bit about being an entrepreneur. Like, I want you to, because I have different businesses and I've started different businesses, and some have done well and some of them have not. So, and that's what happens when you've done different things. But the two main core was for the education and for Main Street have been wonderfully successful in that we're doing the right thing. And now Ted is helping to take that to the next level. And I even utilize his guidance on the education side in terms of CFP education. Like, what do you think of this? And what are your thoughts on this? And that's what's fun, having someone to collaborate with and who's not looking at it as, all right, I'm in this, I'm doing it in a selfish way or in some corporate way, which is nothing wrong with that. We don't have to worry about the politics involved. Long answer, but that was for me, that's a deep question because it's been a journey.
It is. And I think, Ted, I would like to shift it back to you. I think one of the things that on this podcast, I've been blessed to interview countless high performing advisors. And in almost all those conversations, they all comment, they put the client first. And that's also from my days when I was carrying the bag as a wholesaler as well. So I think everybody says they put the client first. And I believe they do. Not here to challenge that or demean anybody at all. But I think it sounds like you guys, I've literally made this kind of the cornerstone of your practice from the very beginning. And Brett, you mentioned that you don't want to take outside money because that means you kind of have to then start putting the almighty dollar ahead of a lot of other things. Ted, one of the things I'd love to hear kind of your take on that is kind of I guess that is probably, I'm assuming it's one of the things that kind of led you to join Main Street. Where do you kind of see any examples of how you put this into action on a daily basis?
I'm going to answer this a couple of ways. And thanks, Bryan, because there's a lot to this. One, not to make this a me back and forth with Brett, but great story that we all probably read years ago called Charlotte's Web. And there was this pig that won a contest and had to have a word that was put in. And there was this word that was put into a spider web. And to me, it epitomizes a lot of Brett and the respect I have for him and where I believe we can go as a firm. And that word was the reason that Wilbur won was humble. That was the word, humble, a humble pig, not the biggest, not the fattest, nothing like that, but humble. And Brett has remained humble with the success that he's had. And why I say that goes into exactly where you're going, because I was a client of Brett, in essence, during the recruiting process, if you sort of view it from that standpoint. And there were certain things that we had, but what was key in that was, are we going to stick to that client first mentality? And where can we take this? When I entered the business, I was looking to potentially work at one of the rotationary programs. And I'm not knocking those, they're wonderful. But I found a lot of young hotshot kids. We were broke growing up, so I couldn't really relate. And I finally called my mom and I was like, listen, I don't think I want to go to one of those. All they talked about to me about was money. She said, if you're not going to go to one of those, call Merrill Lynch. And they've been good to our extended family. And I met this guy, Jack Armstrong, who hired me. And he said, here, if you can make 300 dials a day, and if you can remember, you got to remember this, kid. You got to put the client's interest first always. And if you do that, you can help generations upon generations of people. It's rewarding. It's a gift that never stops giving. I'm listening to this big New Yorker, and I'm thinking to myself, wow, that's interesting. He was the first person on Wall Street to actually tell me you can do well by putting the client's interest first. And he created a visual picture of, if you do these steps, success can then go. And in my mind, as a young guy, I was like, I can make 300 dials a day and be told no. I can handle that. And I love people. And I want to put their interest first. And if we do that all the time, the byproduct can be pretty special. So why I mentioned that into where we're putting where our money, where our mouth is. I had mentioned to Brett, and one of the reasons why I was attracted to Main Street on top of the people and the personality and the culture and the yin and yang I believe that we have is I want to be self-funded. I didn't want to do a shift from one corporate quarterly earnings into not knocking private equity or other strategics and that kind of stuff, but into another place. Didn't want to necessarily do that. And I wanted to get off of we have to pay people huge dollar amounts to go from one place to the other. And then you're convincing your clients that's right for the client to go from this firm to that firm. And they don't really know that you just received 300 to 500% to make that move. So I wanted to move off that. And then the other thing is I wanted to be able to look and say, how can we make sure that we're truly agnostic? Not a structured product, not something that has more VIG within it. It's fair across the board. And then the final piece that people don't talk enough about, but it's out there is, and it's not that any of this is bad, by the way. There's no judgment. It's just at my stage of the career, for my value system, and where I believe the purity of interest for the client's lives is, we didn't want to have an event. There doesn't need to be a 3 to 5 year event receiving certain strategic funds to be able to then go out and aggregate into a place that creates something that's substantial for the principals. We're building a business, and we're not just building the business, we're expanding upon a wonderful business that Brett and team already created because we have great people. And we want to have more great people that want to be able to have a business where they can look up and say, honestly, this is the place to join. I want to grow here. I want to retire from. And I hope my children do that too. And it's going to be the same result for the clients because that's what matters. So that may sound a little romantic and that kind of stuff, but that's actually what we talk about at every strategy meeting that Brett and the team that we talk about at all times. So that's where we are, Bryan.
Nope, that's great. That's great. Love to hear it. Curious, goes for either one of you guys. Curious to see if you have a story that sticks out in your minds where Main Street's approach, client first centric, has made a positive impact on a client's life.
I'll just use a sort of a generic one because it's happened numerous times. And that is clients that we work with will say, hey, what about paying off my mortgage? And we're not talking incredibly wealthy people, but they do have cash and they have $1 million or $2 million. And I'll say, well, let's talk about that because you have a lower interest rate. So you have 3% interest rate and, you could pay it off. And this is when interest rates were, now they're 5% or so, but this is when short-term interest rates were at 1%. I'd say, look, yeah, it's up to you. You have a low mortgage and interest rate, and you can write that off. And we probably can make more money not in short-term treasuries, but if we put it in the equity market, probably make more money doing that. But talk to me more about that. And when we'll go and explore it. And then I'd say, you know what, why don't you've got $350,000 here and you do have cash. Why don't you just pay $50,000 of it? Let's just go ahead and do that. And there's been a number of times that within the year, it's all paid off. And they will say to me, why is it that my advisor never talked to me about that? I said, because they want to manage your assets for 1%. And there is intellectually an arbitrage there. I get it. So for investment properties, I say, no, you want to, take out loans, et cetera, use borrowed money. And yes, even for mortgages, you could say, no, I want to invest it and make the difference and have the arbitrage on. I get that. But for some clients, they want to own their house. They want to wake up and say, I don't owe the bank anything. This is my house. And for me, that was really important. So I always tried to pay off mortgages before, as soon as I could, before it was even due. It was like, wait a minute, I know I have 1 month, I'm going to do 3 months, or I'm going to do 5 months, or I'm going to put a block of capital on there if I can to pay it down sooner rather than later. Because it's something that my wife and I could say, hey, we own this, we have this. But I have to tell you, I don't think that conversation is. I've had friends of mine who are financial advisors tell me that's the dumbest thing I've ever heard. Why would you ever do that? Because they're doing the numbers. And the reason why I bring this up is because I believe as financial advisors, we are financial psychologists more than we are money managers. You can farm all that out. And yes, the planning side, but it's understanding what their goals are, understanding what is important to them, and really getting at that core. And then it's almost, we're going to plug these in and these investments, and we have your risk tolerance, we'll plug that in. But I would argue getting at what they want. I tell when clients say, well, what should I bring to the first meeting? I said, should I bring statements? I said, you can if you want. Just come, but write down your goals, short, mid, and long term. And that's what I need to know. Yeah, we can look at all the other stuff. We can fill all that in. That's, I would argue, the easy part. The hard part is getting you to a place that you're content. I think that's really the most important thing. So I would argue that's where it makes a difference in a macro level. And that's one little example on the mortgage. But I would argue really getting at that goals, that's one of the things that I think we spend a lot of time talking about. And it is really important. It's not just, here's the hottest stock strategy, or here's this. Yeah, if you want active management, we have things for that. Passive, we have things for that. But let's get at a core as to what you're really looking for and spending time on that. Ted, I'm sorry, I jumped in there.
Can I jump on top of that, Bryan?
Of course.
All right. So, and I love hearing Brett. Brett, and I make an argument. There's no real stronger financial planner in the industry. But all a financial goal is And we talk a lot about planning, but goals-based wealth management is so critical inside of that, which is all financial goals is an unfunded liability, right? Once you fund that liability, shift risk. And we don't do that very often. What happens is we put it all into one bucket, and that bucket sort of goes like, oh, well, here I've got a 7-year time frame. I've got a 12-year. No, each goal is its own living entity within that. And that needs to be respected very much. So as you isolate those things down, so story specific, I was an advisor for my first 7 years of the business. And on that, this was I have a couple like those moments that you say, oh my gosh, that changed things. That was, I was in the middle of a critical moment, didn't realize, boom. So I received this box. This box comes to my desk. I have no idea what it is. It's small. And in it is dirt wrapped in plastic. I've told Brett this story before. I'm like, what the heck is that? And there's this client of mine, Eugene Pacifico, loved him. He's no longer with us. And when I started to work with, he was in an account that I inherited at Merrill that got bounced around because he was a small account. And he had said to me, now he was relatively wealthy and he had good money coming, but he said, I want to buy my own home and I want to get out of the city of Manhattan and I actually want to own a home. And once he broke and the foundation to build his first home, that was the dirt that he sent me because he felt that I was instrumental in keeping the eyes on the prize that way. So there are things like that. And it goes back to being high that you can help generations. And that was a critical moment for him. That was huge. That was like the biggest moment of his life. And then the other one that I would say, because a lot of our clients, and then the question you're asking into that impact on clients' lives, a lot of our clients are also the employees, right? And when you see an employee that you're mentoring, you're seeing them prosper and you're seeing them be able to get to another stage of life, or you're watching them send their child to college and they funded that. And that's because of the fact that a door was opened for them. That's really the gift that keeps on giving for everyone and being able to go through. And it's I say it often that what we do is noble and good in our business. And I believe what we do is noble and good. That they're the moments is when you're seeing their child marry, you're seeing the graduation. Unfortunately, you're going to a funeral. And you're reflecting upon a lot of the great things that occurred. So it's all of that kind of stuff, Bryan. But that is the ultimate reason we're in this business is to help people in its most simple form.
Well said. Couldn't agree more. Love to we're going to transition fast forward here kind of in the future, if we can. And speaking with you both, it is extremely evident that Main Street puts the client first and you both kind of share a passion for that, maybe even above the company's bottom line in the short term. Because I do believe you're right. I think you put the client first, good things will happen down the road, and you'll grow at the rate you should grow. Would love to hear. I'm curious, how does that translate on your journey and what you have planned over the next 3 to 5 years? Is there anything specifically that you kind of see? I guess an area you've talked about advisors moving for multiples of money. Is there anything you see or kind of a place that some of the firms aren't looking at? You guys think you can kind of tap into in the future?
First and foremost, I'm going to use a term. There are terms in life we use that they seem simple, but they're not. We're going to have fun. And making that, we want to laugh. We want to enjoy. We want to be able to rejoice. We want to celebrate, okay? Because success is worth celebrating. And we want to hold hands. We want to do it together, right? Like, as we all know, one arrow you can break. You put 3, 5 together. It's hard to break that, right? It becomes very strong. And we want to have appropriate growth. So this is going to sound counterintuitive, but Brett and I go back about this a lot. Like especially when I first came over, like the very big about, what are you going to do in the next year or two? And Brett and I would look and say, we don't have goals. And they'd be like, what? We have goals. Of course we do. But we're not looking to either shorten that opportunity or put ourselves in a level of stress that we want to hire at the appropriate growth rates with the right people. That's what we're looking to do to help our clients. But that piece, first and foremost, having fun, because you can tell. You walk into any office in the United States of America or in the world, and you oftentimes, that first feel you get, whether or not they enjoy each other. And you can't fake that. And that, to me, is your leading indicator into where we can go. Our firm right now is flexing in a good way because we have advisors out there that are in a different stage of their career. And we, if we can, want to match where they are so that they then can have peace of mind to help their clients in the manner that they see best fitting to help their clients. And that's not easy to do, right? You talk about strategy, that's one thing. operationalizing a strategy gets real tricky. And that's what we're doing. So I'll let Brett take over from there because he is much more well-versed when it comes to this than I am.
I don't want to repeat what Ted said. Everything he said is absolutely true. It's having the right kind of advisors. I would argue also the right kind of team members. So it's not only just the advisors, it's also behind the scenes as well in terms of management. One of our things is we want our advisors to always own their clients. So, and I've had people tell me over and over again, friends of mine who are in the industry, they're like, are you crazy? Like, you have to trap them here. You've got to sign they sign a contract saying they own their clients. If we're not meeting their goals, we ask 60 days, let us know, because we don't believe leaving in the dead of night is necessarily the right thing for the client. And then calling them, and then it's have somebody else calling them. And I get all the legal ramifications. I get all that. But Ted and I are in a stage of our career, not that we're so rich and anything like that, but we're at a stage of our career like, wait a minute. We don't want people around who don't want to be there. We don't want somebody saying, yeah, I got to stick around or I got to do this. That's not worth it. That's not productive. It also harms the environment and the feeling of what we're trying to create. So I've had it was great. We had an advisor who came over and his lawyer read the agreement. This is what he told me. He goes, the lawyer kept reading it because they'd never seen an agreement that was like, well, you can leave and you can this and you can that. They'd never read that. And they were like, what's the catch? Like, what's the catch? And they didn't really have any changes. They were like, sign this. Like, go ahead. And so I joke, but there's obviously, if we're not doing things right, I want people to be able to fire us if we're not doing it right. If we're not providing them with what they need and we're not helping them on their journey, I want them to be able to fire us. And you say, well, in a mean way? No, they would leave. I hope that we create a good enough environment that they're saying, you know what, I'm getting everything I need here. That's actually the goal. Just on a side note, for our education business, most of the companies out there that do certified financial planning classes, what they do is they package all the classes together. So there's 7 educational classes they have to take. So they'll package all 7 together, and then they give you a discount on it. They say, well, we'll give you one of those for free. So then the people sign up. And so it's one of those things where I never wanted that. I'll give you, do some sort of a discount, but we'll even it out over all 7 classes. And here's why. I want you to be able to fire me after the first or second class. If I'm not meeting your needs, and I realized this strategy because we were all together at a conference about 10 years ago, and there was a number of other providers out there, and they were laughing. They were like, yeah, it's the greatest deal in the world because most people sign up, buy all the classes. We give them a discount, 30, 40, 50%. Don't go past the second or third class. So we get paid for doing nothing. It's great. And they said, why do you do it that way? I was like, oh, yeah, I'm just a dope. I don't know. And I played it off because I was like, wow, this is the difference. These are the little things. And I think it permeates throughout the firm. We're not a perfect firm, of course not. But for an advisor out there who's looking for a team atmosphere that they can work with their clients, they can build their business as they want to build, they can work with the vendors that they want to work with, not, oh, well, we're not going to allow you on the platform because you don't give us a piece of the action or anything like that. There's nothing wrong with that. There's nothing illegal. We've decided not to do that. We want people to be able to work with the vendors they want to work with. We have to do it all based on compliance. It has to all be done correctly from a regulatory standpoint, but we'll figure out how to do that in the right way. And I think those little things permeate throughout the business. And I think that'll make us stronger and allow us to grow in the right way. I believe people want to be with winning organizations. Now, some people would say winning means everybody makes lots of money. That is one aspect of it. But I think the fun aspect, I think the ethical aspect, I think the focus on the client aspect, I think all that goes together. And if we can get advisors who say, you know what, I'd like to talk to you about it. I'm not saying we're the be all and the end all for all advisors, but I want to talk to you about that. We would welcome that. And that's why it's not like we have to have 1, 2, or 5 people come over in a year. We could have 5, we could have 0. But if those opportunities present itself, we want to welcome those folks in. And we want to know, as certified financial planners, like my way of looking at it is, what are your goals? That's what Ted and I talk about with advisors. Like, what are your goals? And if your goals are simply, oh, I just want a big check, we're not your firm. But if you want to really grow, and we'll show you how over time, if you can grow at a good and at a decent rate, not even astronomical rate, but grow at a nice rate, you'll actually make more money in the end because your payout's a lot higher. We give a much higher payout than other places because we're not paying them up front. So if you have the long term, looking at the long term, guess what? We're actually your place to be if you want to grow, because we're going to allow you to even have more independence and make more money in the long run, because we're going to have a higher payout and a higher payout at different levels than other folks out there. Plus, we're going to handle all your expenses. So we're going to go ahead and take care of their payroll for your assistant. We're going to sign the lease and pay your rent. So you can just work with your clients and then work with prospects and work with growing your business. I get really excited about this.
The one thing that I'm going to try to sum up kind of the conversation thus far is really doing things the right way. And I think that's kind of, if I could put it in one sentence, which I'm notorious for trying to dumb things down. And I don't mean dumb things down, but I mean, just give me, coming from the Army, it was 30 seconds or less. And I think that's what it sounds like. And it's really coming through in the conversation that's you guys want to have the right people that are going to be a good fit. It's going to be a good team, a good culture. And all of those things translate into a great client experience.
Bryan, exactly.
Well said.
One final question for you, gentlemen, if I may. At Harbor, we're firm believers in active management, though it's important to acknowledge that every financial expert has their own unique perspective. From your experience, what is your take on active management, and where have you seen it making the most significant difference? Let's start with you, Ted.
I believe in people. So I believe in active management. Okay, so let's just sort of start there. I teach people over process and algorithm any day of the week. But here's what I mean by it, okay, because that statement doesn't mean that much. So it's funny because you got passive, active, and this debate that's going on. It used to be active and then core, that was core, and then passive was sort of the satellites around it. Now it's sort of passive is core, active is satellites around it, and those kind of things. But let me try to prove this out a little bit, why active management is so important. Private equity is the be all and end all now. Everybody, private equity, private credit, private this, private that. That's active management. They're actively looking for companies to go invest in and to purchase because people tend to find iron sharpens iron. So I believe that it all matters. So whether somebody is looking and saying, guess what? Studies have shown that passive management, you just stay around the indices and that kind of stuff. I get it. And that makes perfect sense. And I've done a supporter of that. But the other way I'd prove it out would be this. Planning is very active. It's very active. Goals-based wealth management is very active. So we might also need to redefine what active versus passive means, because all that wealth management work that goes into the decision-making process is beyond just the investment choice. And we can figure that piece out. And there are some times where you need to be able to look and say, this active manager is right for this particular financial goal, going back to what I had said before, which is the unfunded liability and how much risk we want to associate. So I would say, obviously, it's a blend, but I don't really appreciate when people say, I'm all this or I'm all that, because if you're going to go, I'm all this or I'm all that, you're leaving a lot out there. And I don't know if that necessarily is right for the client situation at hand at all times. So that would be the way I view active and passive and active management in general.
In college, they made fun of the passive folks. They thought Bogle was an idiot. So this is, now I'm older. So this is in the late 80s, mid to late 80s. And it was one of those things. It was like, why would anyone want to be average? Like, what are you doing? You got to outperform. But then the pendulum has swung so that people are like, oh, you can't possibly, I love that people are like, you can't possibly outperform. Well, yeah, you can. The question is finding the right people, the right the right investment managers, the right solutions. And what Ted brought up was, I believe that planning side actually is incredibly active in dealing with things. And yes, the investments can be passive or active, but now it's trying to find the right active investments. I think that is the key, because right now there's a renaissance out there of active managers. It's more and more coming back. You need this. We don't want to do that. I have the reason why Main Street, I call it was named Main Street, was I believe Wall Street has wonderful things, but they have a profit margin mentality. So Wall Street's great. So we as advisors take all the good things from Wall Street, but we protect our clients from the bad parts of Wall Street. And I think some people on Wall Street are forming funds to do active things simply because the margins on the passive stuff is too small. And I really think that there's a whole core out there that's being now discovered of active funds that actually are outperforming and are really out there and doing things in a way that absolutely makes sense. It's trying to find those. And it sounds like that's what you're doing. You're saying, yeah, we're finding it. We're finding the strike. We're finding what we're looking for. And I think that's what's important. And I think that's tough for advisors. I think there's a sea change going on where advisors are trying to figure out, how do we find the right active advisors? How do we actually do that? So the planning's part of it, and then there's the investment part. And I think we're sussing that out right now. I really do. In fact, Bryan, I would love to hear your thoughts on that. I know I'm putting it back to you, but yeah, no, because you're experiencing it. You know there's stuff out there you're like, that is not worth it. Now, you can't say it, no names, but you know what I'm talking about out there. Let's be honest. And you're like, wait a minute. They're just putting something out just to put something out. It's not really their core. It's not really what they really want to do, but it's a higher profit margin. So I'm not saying you name names, but I'd like to hear somebody who really is well-versed in it.
No, you're 100% right. I'm not going to name names, but it's one of the things that, having traded for managers and kind of hedge fund managers and having seen that space and how that space operates for decades, and then moving over to the ETF side, smart beta and passive, one of the things that did draw me to, Harbor is that I think it's funny. You mentioned it best, like the pendulum swung so far to the passive side. And we, all three of us, live very close to one of the largest passive managers in the world. And I think anytime a pendulum swings, I'm always, and I'm not a betting man by nature. As a former trader, you would think I would be, but I'm smart enough to know that things come back the other way. And I think we are kind of in a seminal moment right now in the marketplace where, I think low interest rate environment really helped fuel kind of, the passive indices and kind of more of a cap market weighted structure. And you're starting to see things slowly kind of work back into a different regime. And I think, what we've seen in the markets the past couple of years, yes, the indices are still the benchmarks. They still kind of can perform well. But people will ask me, how long do you think it's going to take people to kind of get over a low interest rate environment? And I said, well, they've been in it 15 years. So you got to give them at least 15 years to get out of it. So I'm like, I think we're in the second inning, maybe top of the third, of people kind of learning a new regime change and how investing is going to change and be going forward. And I think that's one of the things that drew me to this business. I wanted to be challenged every day, and I never wanted things to kind of stay the same. And so it's been one of the things that I learn every day from talking to gentlemen like yourselves and kind of just reading and seeing everything that's out there. So no, you hit the nail on the head. I think we are undergoing this period of change, which is why I think you're seeing this volatility in the marketplace and going nowhere fast.
And I think there's room for both.
Agreed. 100%.
I think there's room for both. It's finding the right, it's easier on the passive side, but it's finding on the active side. It's like, look, and that takes, you need some help there, I think.
No, agree. And I think sometimes your best active managers aren't ones that have, a shingle out there on Bay Street in Toronto or on Wall Street in New York City. And so sometimes you have to go find them. And that's one of the things I think that we do pretty good. Last but not least, how can people find you gentlemen online?
Well, we're Main Street Financial Solutions. And so it's msfsolutions.com. Or just Google Brett Danko or Ted Durkin, and you'd be able to find us. And we'd always love to chat with folks if anyone's interested. Ted, is there anything to add there?
No, that's great. As soon as we hear from anybody, we'll give you our cell phones and we'll move on from there.
Love to. We're going to transition here to my favorite part of the podcast, gentlemen. 60 Seconds with Brett Danko and Ted Durkin. Nickname?
Sensei.
There.
Profession if you weren't in finance.
The teacher.
Baseball.
If you could instantly become an expert in anything, what would it be?
To understand language.
Mind reading.
Best professional advice you've ever received?
Be curious, work hard, become indispensable wherever you are.
No one cares how much you know until they know how much you care.
What's something you wish you were better at? at?
Directions.
Patience.
What piece of advice would you give your younger self?
Be kind to yourself. Don't beat yourself up as much.
Go with Jimmy Valvano. It's a great day if you can laugh, you can cry, you can think.
What's one question you think all clients should ask their financial advisor?
Why are you a financial advisor? What gets you excited?
What is your relationship with your immediate and extended family?
Most rewarding part of your job?
Working with people I care about and helping them to do their jobs better and allowing them to help me to do my role better.
Mentoring.
Favorite way to get active?
Love wandering around the golf course.
I love working out.
Whether you're a seasoned advisor or just getting started, The Active Advisor, brought to you by Harbor Capital, offers professional insights for the financial advisor community. Visit us at harborcapital.com to learn more. And don't forget to subscribe to The Active Advisor on Apple, Spotify, Google Podcasts, or wherever you listen to podcasts to stay up to date on investment trends, tried and tested research methods, and what your industry peers are up to. From all of us at Harbor Capital, thanks for tuning in.
And now for important disclosures. This material is for informational purposes and is not intended to be relied upon as a forecast, research, or investment advice, and is not a recommendation, offer, or solicitation to buy or sell any securities or adopt any investment strategy. The opinions expressed are as of 30th of August 2024 and are subject to change. The opinions expressed by the speakers do not necessarily represent the views of Harbor Capital Advisors, Inc. The information and opinions contained in this material are derived from proprietary and non-proprietary sources deemed by Harbor Capital Advisors, Inc. to be reliable and are not necessarily all-inclusive and are not guaranteed as to accuracy. This material may contain forward-looking information that is not purely historical in nature. Such information may include, among other things, projections and forecasts. There is no guarantee that any of these views will come to pass. This material may not be representative of the experience of other individuals. Reliance upon information in this material is at the sole discretion of the viewer. This material is not legal, tax, or accounting advice. Please consult with a qualified professional for this type of advice. Investing involves risk, including the risk of loss. Stock markets are volatile, and equity values can decline significantly in response to adverse issuer, political, regulatory, market, and economic conditions. Fixed income investments are affected by interest rate changes and the creditworthiness of issuers. As interest rates rise, the values of fixed income securities are likely to decrease. Specific companies and issuers are mentioned for educational purposes only and should not be deemed a recommendation to buy or sell any securities. Any companies mentioned do not necessarily represent current or future holdings of any investment products. Harbor Capital Advisors, Inc. does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. This material is prepared by Harbor Capital Advisors, Inc. Harbor Capital Advisors, Inc. is not affiliated with Main Street Financial Solutions, LLC. All trademarks or product names mentioned herein are the property of their respective owners. Copyright 2023 Harbor Capital Advisors, Inc. All rights reserved.